It's time now to do a review of Tuesday's numbers at the Nigerian equities markets with Eddie Young Iwan. Good morning, Eddie. So investors finally got to smile yesterday.
Good morning, BC. Finally, there was some positive sentiment in the market yesterday, which is largely attributed to bargain hunting on Airtel Africa, Boa Cement, and Zenith Bank. But that pushed the all-share index up by 0.30% to 24,097.48 points. Investors gained about 37.26 billion naira yesterday, and that pushed the equity cap to 12.570 trillion naira. However, volume was a bit lower yesterday. We saw about 155.52 million shares worth 2.60 billion naira traded in over 4,000 deals. It's a similar picture on the activity chart yesterday compared to Monday's session, where we saw 2 sectors post gains and 3 declined. So banking index was up by 0.92%. Of course, that's still that was as most lenders posted gains on that counter. Consumer goods declined by 0.52%, and that was no thanks to losses on Unilever, which declined about 9.78%. Industrial goods rose marginally by 0.09% as investors decided to take advantage of the lower stock prices on Boa Cement. Insurance reversed Monday's gains and declined by almost 2%, while oil and gas declined marginally by 0.02%. As you can see, that was, due to the decline on MRS. But I'm being joined by David Adonri, a stockbroker at HighCap Securities for more. Good morning, Mr. Adonri. Thank you for joining us on the program.
Good morning. It's a pleasure being with you.
How is the market reacting to the resumption of the new SEC DG, Dr. Lamido Yuguda?
Well, that is an important event, but I don't think it's affecting the direction of the capital market, as equities remain weak and financial assets continue to migrate to the debt market due to the weak state of Nigeria's macro economy.
So the gains we saw yesterday in the markets, are they sustainable, or we shouldn't get our hopes up yet?
The market will be very volatile. That is that today there will be marginal gain, tomorrow the market will lose again, and so on and so forth. We are still in the buyer's market in this season, and also as a result of the weak macroeconomic situation and the precarious situation arising from the COVID pandemic that the economy faces. So we are going to be in a phase where the equities market will remain a buyer's market for quite some time, and then the debt market will become stronger. If you look at what is happening in the debt market now, that is where all the activities are shifting to. The yield on bonds has been declining steadily as the prices rise, as volumes pick up massively in that sector. So we are going to be seeing sporadic movements in activities in the equities market, perhaps only specific to particular sectors that are not severely vulnerable to the downturn in the economy now, and as a result of the forecast that faces the equities market.
Thank you for your input on the program, Mr. Adonri. David Adonri is a stockbroker at HighCap Securities. Over to you, BC.
All right, Eddie, let's hope that the market maintains the positive momentum today.